So you want lower interest rates. Perhaps you're President Trump and you want Mr. Late to start cutting the Fed funds rate. Well, folks, some of the Fed members are starting to talk after the latest Fed meeting, and some of them are highlighting not only could not have rate cuts, the next move in the Fed funds rate actually might be higher. Did anybody out there have higher interest rates on their bingo card in 2025? If you want to know what I'm talking about, Fed President Cook indicates that a less productive economy could require higher interest rates to control inflation. Now, again, this is coulds and maybes and all of those things, but I do think it's fair to say that the next Fed move may not be lower. I know lots of people out there have been hoping, having hopium and praying and this, that, and the other. But given what is going on in the economy with tariffs, given the unknown nature of reciprocal and retaliation and all of those things, we need to understand that it is possible. It is a non-zero chance that the next rate move is higher, not lower. Now, what does this mean for all of us on this channel? It just means that if you're doing a deal, you're out there hunting the deal of the decade, the deal of a lifetime, please protect yourself. Make sure the deal cash flows, it works, you are happy with it at the prevailing interest rate. I have said for a long time, and I believe with every fiber of my body, I don't care if rates are 10%. In fact, part of me, in all honesty, wishes interest rates were 10%. Do you want to see demand crash? Do you want to see supply increase? Do you want to see motivated sellers raise their hand? Higher rates will do all of the above. So again, folks, let's just not forget that I know the media is talking about rate cuts. When will we get it? Is it June? Is it July? Is it 2026? Just remember, the next move might be up, not down, according to Fed President Cook. Well, folks, as you see on the bottom of the screen, it is Mother's Day. If you are watching this and you are a mother, I would like to wish you happy Mother's Day from myself and the entire ORaaT community. If you lucky enough to have your mom around still, do me a favor, give her a call. Don't send her a text. Don't send her an email. Call her if your mom is still with us. And if you know, if ladies in your life are moms, it's their day. Really, it should be there. It should be more. I don't know about you, but Mother's Day should be more than a day. All the things that my mom did for me, my sister, the choices that she made that I have told her repeatedly she was silly for making. She chose to have a hard life when she could have chosen the off-ramp to have a better life. She chose the hard life for her kids. Again, that is a choice I wish she didn't make. I feel guilty for. But she tells me all the time she was happy to do it. Yeah, crazy. Moms, you deserve more than a day. That's just my opinion. All right, let's move on before I start tearing up a little bit. Let's talk about what's coming up for the week. Tomorrow, Monday, we get one Fed speech. We really got to watch the Fed speak because, again, they're going to be explaining higher for longer. Perhaps like Fed President Cook, they're going to start planting the Fed flag that rates will go up, not down. At least there's a risk of that. Tuesday's a big day. We get CPI. CPI headline is expected to come down once again to 2.3 from 2.4. Core is expected to be sticky at 2.8, however, below 3%. So the second month in a row below 3%. I will remind you that the base effect gets really ugly the next 3 months. So this is the last base effect that is net positive. The next 3 months, I'll say it right now. The next 3 months has a real risk of inflation to be going up, right? The base effect is essentially zero. And I think 1 month it's negative for the next 3. So be very careful. On Wednesday, we have 3 Fed speeches. Again, pay attention. Thursday, we get weekly claims, 2 Fed speeches, retail sales. Retail sales will be interesting because, again, I think it's going to be a dirty number. I think it'll look on the surface like the consumer is spending. But in reality, I think it's the last month of us buying ahead of time, right? Buying what was it? April 9th, I think, is when these went into effect. So we shall see. We'll also get PPI, the second of 3 inflation readings, and home builder confidence. How could they be confident in this market? Friday, we'll get housing starts and consumer sentiment. Consumer sentiment will be interesting. Actually, you know what? I think consumer sentiment might be the most important number because this will be, yes, a soft number, not a hard number. It'll be a sentiment number, so soft. But it'll be the first number that I can think of that will capture the tariffs. Right, because they got announced on the 2nd. Yeah, consumer sentiment this Friday is going to be an interesting number to look at. Folks, if you are a part of our school community, I know it's Mother's Day, but my mom sleeps in, so I'll be calling her later. So I still will be going live at 8 a.m. I hope to see you there. Happy to take any and all questions on any and all topics. That's what we do. If it's lightly attended, no harm, no foul. We'll just end early. But I will be going live in about 24 or so minutes. The first Chinese freight ships are arriving in Southern California, LA, and Long Beach with the 145% tariff. So we are going to start to see the impact of the tariffs starting last week. Actually, I think Friday was when the first ship landed. So as we move forward, if people are correct, it's going to get slow, and we will start to see impacts at the consumer level in early June. So we still got about 30 days or so. Affirm reported earnings on Friday, gave weak guidance. But I got to ask, the CEO of Affirm is pushing 0% loans. I read this, and I don't, maybe I'm just old and I don't get it. But I think buy now, pay later company doing 0% loans certainly feels a lot like subprime in the Great Recession. Seems like a really, really, really bad idea. Currently, 13% of a firm's book is 0% loans. Again, know nothing about their business. Maybe I have PTSD from the last crisis, but this just seems stupid. I'll just say that. I don't know if you caught it or watched the All In podcast. I'll admit to only being a halfway through. But early in the All In podcast, they talked about Sergey from Google, one of the Google founders. Sergey apparently said AI will replace managers first. Folks, for the last 20 or so years, middle management has been at risk during recessions. I see no reason why middle management won't be at risk in this recession. The fact that AI is going to come for middle management does not shock me at all. If you are in middle management, remember, you got to have a plan B. Is it stocks? Is it real estate? Whatever. Make sure you are doing what you can to protect your family, get close to revenue, skill up, get to 4 rental properties, right? We talk about getting to 4. And of course, if you want to be in a community that will help you with all of that, just join our school community. $20 a month, 67 pennies a day. Looks like the negotiations with China have started. They started yesterday. Looks like they'll be continuing today, which has to be seen as good news. Trump has also suggested that he is open to the idea of lowering China's tariffs to 80%. I don't know if 80% is enough, but it is certainly better than 145 because right now we just basically have an embargo going on. Lyft CEO says not seeing anything to worry about with the consumer. I don't know. A ride-sharing company talking about nothing to worry about with the consumer? I don't know. Call me suspect. We've had a lot of people sign up for school in the last 48 hours. We've had Daniel, Michael, Ariel, Abraham, Samuel, and Daniel. Again, we've actually had 2 Daniels join. So we've had 6 people join in the last 48 hours. I do not know why you haven't joined. We've got 6 different accountability groups, thousands of dollars in education, a wonderful and heartwarming community that will support you. And of course, you get to speak with me live every Sunday morning at 8, at least most Sundays. Let's talk about some more Fed stuff. Fed President Hammack. Firms are raising prices now to get ahead of tariffs. We might need to wait longer to cut rates given this. Again, folks, it's going to be very important to watch the Fed speakers this week because I think they are moving the cheese. I think they are like Fed President Cook saying we might have to go higher. Hammack saying we're going to wait longer. The market is not ready for this. Michael Barr, I expect tariffs to lead to higher inflation and lower growth, aka stagflation. Anybody ask Jerome Powell if he sees the stag or the inflation? Yeah, that's going to prove to bite him in the butt. Could create persistent upward pressure on inflation. Again, Michael Barr, Fed president. Again, remember rates may go up, not down. Don't get shocked. The Fed's job will be hard if higher inflation and weaker jobs. They're going to have to pick which one to go after. We did get some new housing forecasts from 5 to 7 different firms, depending on the metric. Again, shout out Resi Club for putting all this together. On interest rates at the end of 2025, the average call is 6.4. Actually, MBA, Mortgage Bankers Association, has the high end at 6.7. Wells Fargo, the low end at 6. I don't know how Wells Fargo gets a 6. That seems a little wild. Inventory, everybody expects inventory to keep rising. No shock there. And then finally, price. I thought price was pretty interesting. These are 7 different firms. Fannie Mae, I think Fannie Mae is smoking a little bit of the funny stuff. They think that home prices will be up 4.1% in 2025. And Zillow out with a negative call, negative 1.9%. The average call for 2023 is 2.3%. I'll actually take the under. I don't think we get to 2%. So again, we'll talk about that. What else do we got? Fed President Hammack again, strong case to maintain monetary policy, basically wait and see mode. Fed President Mussolin, I can't say that name. I have to hear it. I guess I should go listen online to see how you say that. Trade de-escalation could get the economy back on track. This is really something I've been talking about. Maybe we've had peak uncertainty. Perhaps peak uncertainty was actually 2 weeks ago, and we're going to continue to build from here. That would be net good news. On the rate cut front, says that rate cuts are possible if, and this is a big if, inflation proves short-lived. Again, if expectations for inflation are stable, and here's the worst one, the economy weakens significantly. Folks, if you're out there hoping, begging, praying for a rate cut, be careful what you wish for. The Fed clearly does not want to cut. They're only going to cut if stuff breaks and breaks hard. Fed President Hammack reminds us that there is not a lot of data before the June meeting. Basically, folks, no rate cut coming in June. They're already saying that. And then finally, Fed President Williams, the next few quarters, not weeks, not months, quarters, will help illuminate the economy state of affairs. Again, my call for no rate cuts in 2025 starting to look pretty good to me. And then finally, now is an inflection point where the hard and soft data meet. Again, folks, as I talked earlier, I think consumer sentiment on Friday might be the first indication of soft data on the tariffs impact. So I'm going to call Friday the most important day of the most important economic data of the week. Folks, I hope you enjoy this. Let's not forget that Steadily is Landlord Insurance. They are only focused on landlords. If you have a policy and you just want to compare, give them a shot. The link's in the description below. If you are new to investing and you just want to build out your buy box and your spreadsheet, put in one of your properties into Steadily just so you know what insurance costs, so you are not surprised and not guessing. They can't help everyone. They don't cover the entire United States, but they are getting bigger and stronger. They just closed a $30 million round with the sole goal of covering more and more of the country. So give them a shot. Steadily Insurance, link in the description. Take care. We will talk to you tomorrow at 7:30 a.m. See you there. Bye.